What come to your mind when you think of photo and video editing? Many of us will think of Adobe. The products such as Photoshop, Premiere Pro or even Acrobat Reader, which used for reading PDF file, came from Adobe. The market cap of Adobe is around $140 billion. Adobe is one of the biggest SaaS company in US market. The company founded in December 1982, while Microsoft founded in year 1975 and Apple founded in year 1976. So that is the time where personal computer industry began. Adobe can be considered as earliest company that focus on computer software application. In fact, Adobe was founded so early that many application formats, such as PDF, were developed by Adobe, as was the term Photoshop, which we use to describe photo editing, which is also a product of Adobe. Adobe has dominated the creative digital content industry and has good reputation for their products for more than 10 years. Many of the content creator will use at least one of their products. However, will this company continue to do well in the future? Will their moat still remain indestructible when other software companies such as Canva or CorelDRAW seek to compete with them? Today we are going to take a look in Adobe fundamentals. Adobe's revenue is split into three categories such as digital media, digital experience, and publishing and advertising. The major revenue contribution, which will be 73%, comes from the digital media sector in year 2021. All of the famous products and cloud services came from this category. Basically, if your job involves in film or photography, you must be used at least one of the product from the photo. For an instance, you would use Photoshop for photo editing, Premiere Pro for video editing, or Adobe Illustrator for editing vector designs. All of these products have one common characteristic: these are powerful tools and outstanding application in their own industry. However, along with their robust and powerful functions, these applications are also more difficult to use when compared to other software. Hence, Adobe focus on the professional users instead of casual user. Let me give you an example. There are many applications are able to separate the background and objects with just single click. On the contrary, there are several buttons and symbols on the side if you wish to utilize Photoshop for this effect. If you're just starting off, you might not know which button to press. Although Photoshop is capable of using AI for these tasks, it is nonetheless regarded as being difficult for beginners to utilize. However, this also turned into one of the Adobe's advantages. Professional users did not simply switch to other software after becoming familiar to Adobe software. Since Adobe has all the features they need, they would actually prefer to pay than switch to another piece of software. Here come another myth. Will the difficulty of using Adobe software affect the company's ability to bring in new customers? In fact, the impact was less than you expected. Why? Take photo editing as an illustration. If you wish to master some photo editing skills, you will look at other existing user recommend software. Most of the websites will recommend Photoshop because it has all the features you need and have been using by most of the corporate worldwide. So, under all these circumstances, the users normally will try to learn Adobe software instead of others. Moreover, Adobe changed their business strategy 10 years ago. Adobe changed the payment method and moved their operations to the cloud. Customers can now acquire Adobe products via subscription rather than one-time payment. Due to the fact that subscription costs are typically less expensive than one-time payments, this will improve the likelihood that new users of Adobe software will use it. We can see that the Adobe sales and net income have been rising for years. This was mostly due to the subscription model. Adobe separate their products into two categories. One is Creative Cloud and the other is Document Cloud. Creative Cloud included all softwares that related to the video and photo editing, while Document Cloud included the softwares like Acrobat Reader. Basically, Adobe products are strong tools with a wide range of applications and a solid reputation. The business model is also SaaS, which is a market favorite. This was the reason why Adobe PE stay above 40 for years. After we familiar Adobe business model and structure, let's have a look at their financials. Despite the fact that Adobe's revenue has been steadily increasing over the last decade, the rate of growth is starting to decline. The YoY growth of last year was around 22%, but the growth for this year was around 9% to 15%. In its latest quarterly report, Adobe had earnings of $3.40 a share. Revenue came in at $3.23 billion, which represented 12.6% year-over-year growth. Adobe lowered their guidance for the next quarter due to the overall macroeconomic environment, and the US dollar has continued to strengthen against foreign currencies. With Adobe's growth decreasing, the benefits of transitioning to a SaaS model are likely to fade. In addition, Adobe is facing competition from new competitors such as social media apps. The apps like Instagram, TikTok, or Snapchat have built-in tools that are able to edit and filter the photo or video. The web application like Canva, which can use to create social media graphics, posters, and other visual content, is also a quite strong competitor to Adobe. Even though these companies are fantastic, there is still a significant volume gap as compared to Adobe. However, Adobe's moat is shrinking due to the tight competitive landscape. The next phase of growth can be challenging. So, in order to maintain strong growth, Adobe must discover the next leg of expansion. And here come the acquisition of Figma, a collaborative web application for interface design. Adobe announced that it would acquire Figma for $20 billion on September 15th. This news make Adobe's share price drop 16.8% on the day because market think that this acquisition was overvalued. The price tag amounts to about 50 times Figma's projected 2022 sales. However, Figma has built an efficient, high-growth business, so this is not only a fast-scaling business, but they have high margin and positive cash flows. It is a fast-scaling, high-growth, profitable company, but that isn't the reason that Adobe's buying it. If you look at this deal and you just run the numbers on it, you do a discount of cash flow and you try to calculate why Adobe would pay that much. That's missing the point here because Adobe's not buying this company to do it as a little investment. The reason they're buying this company is to ensure that Adobe remains the dominant player in the whole creative economy, from design prototyping, from image creation, from anything that's an artistic endeavor. Adobe wants to cement their position and reaffirm their wide unassailable moat, and they do that by taking out competition, taking out any potential threat to their moat. Figma presented itself as a real potential threat. So what Adobe's really doing here is ensuring the economics of their business, ruling out disruption of the future and making their moat even more wide than it was a month ago, which it was already a wide moat, but it was being challenged by one company. Now that they own Figma, the best designed prototyping software, their moat is arguably much bigger. So the lens that I look at this with is they're not paying for a Figma, they're paying for moat. That's what Adobe's buying. In conclusion, Adobe is a great company and definitely worth investing. I think market is overreaction for the acquisition. However, because the macroeconomic conditions are constantly deteriorating, we must invest more cautiously. If you have other opinions, let's comment below. Please help to like and subscribe.